3 weeks into 2026, we have an early read on the full year 2025 housing market and clues about the key trends that will affect the year ahead. I hope your new year is off to a bright start. I'm Danielle Hale, Chief Economist at Realtor.com, here to break down what the data means, whether you're a home buyer, seller, or industry professional navigating your clients through the housing market. Thinking about next week's Fed meeting and decision is a great lens through which to set the macroeconomic context this year. I expect the Fed to leave its policy rate unchanged for two key reasons. One, the current position of the Fed rate, which is far closer to neutral after 175 basis points of cuts. And two, the trend of recent data. In short, inflation is not as bad as was once feared, with key indicators holding roughly steady, above the 2% target, but not worsening. In the labor market, data has been more mixed, but relatively robust, especially compared with weaker expectations. While there's been a fair amount of public pressure on the Fed regarding its decision, I expect data to be the driver. We're in early 2026, but still seeing data from 2025 trickle in, and we got a key reading on the housing market. Namely, although existing home sales improved in December, the improvement wasn't big enough to put the 2025 total ahead of 2024. In short, that means 2025 was the lowest tally for home sales in 30 years. One notable trend at the year end that could foreshadow what's ahead for home sales comes from Realtor.com data showing that inventory improvement essentially stalled in late 2025, with year-over-year growth slowing and the market remaining 12% below pre-pandemic norms. This could be a challenge for existing home sales in the month ahead. Newly listed homes declined in December, which kept the housing market from continuing in a more buyer-friendly direction as sales improved. In fact, NAR showed that month supply fell to 3.3 months, and even the seasonally adjusted figure dropped to 3.8 months, putting the market back into seller's market territory. Fortunately, 2026 is off to a decent start. Weekly Realtor.com data show that active listings are up compared to a year ago, even though new listings have been more mixed. Asking prices are roughly flat so far, and the market is moving somewhat slower than at this time 1 year ago, both buyer-friendly signs. In the big picture, mortgage rate lock-in continues to slowly release its grip on the housing market, with a key milestone reached in the most recent data. The share of homeowners with a mortgage rate at or above 6% now exceeds the share with a rate under 3%. Put simply, even though lock-in remains a factor, unlocked homeowners now outnumber those with the lowest pandemic-era mortgage rates. Turning to the broader mortgage rate outlook, 2026 has had an eventful start. First, the administration's announced $200 billion in mortgage-backed securities purchases has helped narrow the spread between Treasury yields and mortgage rates. As a result, mortgage rates dropped to just above 6%. This week, geopolitical tensions pushed interest rates modestly higher, and mortgage rates followed suit. Even after this increase, though, mortgage rates remain near some of the lowest levels in more than 3 years, a buyer-friendly development that could improve selling attitudes as well. Finally, even though we paused this video series over the last few weeks, we continue to publish research at our site, including reports on the best markets for first-time homebuyers, the hottest housing markets, the time it takes to save for a down payment, and of course, reactions to relevant economic data and policy developments, of which there have been quite a few. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and Instagram for graphics.